free cash flow has got to be probably one of the most underknown and underrated metrics that are out there for managing not only cash flow in a business, but also the business's general performance. So free cash flow is pretty much, as it seems, it is the free cash in your business. So when you've taken all of your operating cash flow, that's your day-to-day cash, and then you've deducted anything for capital expenditure where you're reinvesting money in your business, perhaps buying equipment or new machinery or investing in IT systems. So it's taking all of your business's expenditure and saying how much cash is left over afterwards. Now, there's only 4 things that you can really do with free cash flow, and you'll see that these are all really powerful things, and that's why you need to be focusing on maximizing free cash flow as much as possible. So if you've got to the end of the year and you can see that you've got £100,000 that is essentially free cash flow and hasn't been either used in your business on day-to-day operations or reinvestment, then you can choose to do 4 things with it. So the first one is probably the unsexiest of them all, and that is that you can choose to pay down some of your debt that you've got. So maybe you've got a mortgage on a business property, or perhaps you've got some finance products such as loans or overdrafts, something like that. You can pay down your debt. Now, at the moment, with interest rates fairly high compared to where we've been historically, this might be a good option. But generally, I would say this is not really what you want to be doing with free cash flow unless you have very high amounts of debt in your business. So the next thing that you can do is you can just simply reinvest this free cash flow back in your business. So if you're doing a business plan for the year and you identify that actually you're going to be generating hundreds of thousands of pounds of free cash flow, that could be a really good indication that you're actually not investing as much in your business as you could. So it could be a simple case of looking at maybe your marketing spend. Could you reinvest some more money into marketing to generate new sales? Or also looking at areas for your business where you can think about long-term investments, maybe developing a website, purchasing some new equipment, something like that, some long-term investments in your business. So that's how you could spend the free cash flow, especially if you identify it before it's happened as well. So the other option you've got, which is quite rare in small businesses, is that you could invest this externally. So what I mean by that is going to be, for example, an acquisition. So you could buy some shares in another company, or you could buy another company. That's another form of investment in your business, but it's external rather than here, which was internal. But probably the one that I think is most important for business owners to consider, and why they need to have their eye on how much free cash flow they are generating, is because this is how you pay your shareholders. So if your business isn't generating any free cash flow, then it actually means that there's no money left over at the end of the year to pay any dividends. So it's illegal in the UK to pay dividends out of your business if it puts your company basically at a liquidation risk. So if you don't have the cash in your business to pay dividends, you can't do it. And also you can't take your business into negative equity. So if you don't have a business model that generates you free cash flow, then it means you can't pay yourself as a shareholder in your business. And this is actually probably one of the main reasons why most businesses are actually worthless. And one of the main things that investors will look at when they're looking at buying a business will be how much free cash flow your business is generating. Because if your business is not generating free cash flow, then an investor can't get paid for their investment. So you might be happy with the returns on your investment because you're probably getting a small salary and topping it up with maybe some dividends, but an external investor is only going to have dividends. So therefore, you need to be generating enough free cash flow to pay your shareholders in order to make your business worth anything. The flip side of that is that if you are generating bag loads of free cash flow, it's a signal that you are not investing enough into your business and that you're potentially not growing your business as quickly as it should.